Welcome at forextrading.com. Let's take a live real trade account example at SP 500 contracts. We are looking at 4-hour chart of S&P contracts, and there was a while when the market hit the sellout button and the sellers came into the market strongly. I was considering going short because the sellout candle was very long, red, beautiful, big candle. We haven't seen those candles for a long time, and we can see the market broke down in important resistance and hit this space below recent support resistance and next probably important support resistance at S&P 500, and I was considering to enter the market short after this candle closed at Friday. So continuing to look at this price chart during the Saturday and Monday, we are talking about 31st of January 2011 trade example when this candle occurred and it started to go to the downside, and I was thinking it might be a nice example of a trade with the short market, with the sellers coming into the S&P contracts, but the price should be staying below this level and moving comfortable, accelerate to the downside, which didn't happen. The price came back to the upside and it changed the view of the this price chart dramatically, because this beautiful shadow was telling us that the market hit some lower levels, but we could also expect some chances for fake breakout like it happened before. We got an example of the fake breakout shadow that affected the market. That market moved to the upside again after this shadow occurred. So I was thinking also that it might be suggesting that anytime market can be moving back to the uptrend aggressive movement. And even though this candle was red at the beginning and the price was moving lower and lower, I had to change my mind very fast because the market came back to some support resistance, recent support resistance aggressively, and it broke down from this small particular level, showing us that this shadow at this candle, this first beautiful shadow, isn't a coincidence, that we are talking about another candle with beautiful shadow and the breakout to the upside. So there was a huge probability of market coming back to the strong uptrend movement after hitting some correction wave, after meeting those lower levels, but it didn't came through. The buyers came back to the market and pushed those prices higher at 4-hour chart twice. So let's take a little close look up again. So we are talking about this candle, which showed us another beautiful shadow, and the prices started to move higher. Then it came back just for a short while and started to move to the upside again. So it tested support resistance, this important level right here, and the market started to move higher and higher. So it was a beautiful time to enter the market with at medium and long term terms to meet some bigger market movement. So this place right here was the first level to enter the market, and the stop loss for this transaction would be around 90 few pips. So we are talking about stop loss just below this shadow candle right here. And the if somebody didn't really make it, the another chance to enter the market was when the price hit the higher levels and came back a little bit and moved up forward again. We could enter the market somewhere in this particular area, right here, or after another breakout occurred. Breakout from those two candle level. So a couple of days ago we couldn't really be sure if the market's gonna make this kind of aggressive move. I was rather thinking about some systematic market movement, not so dramatic vertical wave to the straight to the upside, but we could think about making about 200 pips during some period of few days or couple of weeks time. So the ratio for this transaction with stop loss around 100 points and the profit place with 200 points would be quite okay for this kind of trade. Thank you very much for listening. I hope you will have a chance to see some more real account trades and also training account trades at forextrading.com website. Thank you.